If you're in your 20s or 30s and you want to retire comfortably as soon as possible, it may seem you may not have many choices, but making an early investment is one of the best. It goes without saying that you need a significant quantity of wealth in order to live a comfortable life. Investing your money is one of the best ways to achieve this, particularly for the working class. As you can see, starting to invest early will make you much wealthier. This is an excellent example. Assume for a moment that you choose to invest $500 per month and receive an 8% return on your investment. If you begin at age 25 and follow that plan through age 60, you will have 2.16 million at retirement, but you would only have $341,000 if you started investing at age 40 as opposed to 25. Naturally, this is nothing new, and it is predicted on an investment yielding an annual compound interest rate of 8% without accounting for inflation. However, as I previously stated, this is nothing new, and chances are you've heard it several times already. However, this remains the most effective strategy for most people to increase their wealth and make sure they have a healthy reserve to spend during their later years. To put it briefly, you are positioning yourself for success by getting started early. We'll examine some of the most significant investments and assets you can make in your youth. Let's start now, shall we? The investments I'll be discussing in this video are listed on the screen in no particular order of importance. Thus, let us begin with the initial one, mutual index funds. One of the best investments you can make before turning 40 is stocks. Even though the risk may be extremely high, these yields rank among the best. You have a lot of time as you begin your investment journey to make errors and grow from them, but you should always make well thought out investments. Using the S&P 500 index as a benchmark, stocks have an average return rate of 10%. Actually, not many investments will yield a return rate this high. As you assemble your portfolio of index funds, contemplate including bonds as well. Bonds, however, may be the safest and have the lowest rate of return. Make sure that your portfolio has 10 to 20% of weighted bonds. Roughly, your investment is more secure as a result. Furthermore, you can increase the percentage and change it in accordance with your level of risk tolerance. Crypto index funds were just released. Although they haven't been thoroughly tested yet, they appear to be very promising. The present return rates are considerably high, ranging from 10 to 15%, but the risk also rises as the return rate does. The cheap fees associated with index funds are a big perk. Less expensive fees mean more comes back. Beyond diversification, index funds also offer the advantage that many of them are minimal costs. Your returns will be swiftly reduced by investment fees, so you should try to avoid them as much as practical. Be sure to consider the tax ramifications as you purchase the index funds. Property with real estate, you almost never make a mistake. One of the greatest assets is real estate for a number of reasons. First off, a deficit is nearly invariably present. Real estate and housing assets nearly always see value appreciation. The initial action in real estate. Investing involves buying a house of your own. With a residential property, you can cut costs like rent. After you've won your own house, you might consider developing additional commercial space. These could be offices, townhomes with several units, or other types of real estate. There are other options available, though. If you are unable to invest directly into the real estate market, with a few different crowdfunding sites, you can invest as little as $500. Next, the funds would be invested collectively, combined with the contributions of additional investors, into the real estate properties, REITs, real estate investment trusts, are the name given to these investments. Education. According to statistics, studying is the most effective in your 20s. Your 20s and early 30s are the easiest ages for you to learn new things. According to research, thus it might be the ideal time to earn the additional degree. Getting an education is crucial since it can prepare you for success in the workplace. You must realize, though, that not all knowledge and education are beneficial. Proceed with caution, as certain aspects of learning may qualify as hobbies and thus not be profitable. Start by looking for careers that you are successful in and that you are accustomed to if you want to invest in your education. Moreover, now might be the ideal moment to raise your level of financial literacy. Invest in a startup company when you're still young. Why? The profits from a business are limitless. It will be possible for you to make as much money as possible with an endless return on investment. Starting a business is another investment that you should make in your 20s. There is a huge chance for an explosive return on investment, if it's not the next Amazon at least. Investing in a business at a young age can yield amazing returns. It's not necessary for you to launch the company from scratch. You can invest in other people's ventures in return for stock in those companies. For instance, if you know the founder, becoming an angel investor is a fantastic choice. Your investment may take form of a convertible note, which means that if certain conditions are satisfied, it may become a loan. Crowdfunding is the other method. Numerous crowdfunding platforms feature amazing startups with enormous potential. Make sure you thoroughly research the founder and comprehend the company's history before making an investment. Select companies with compelling narratives and founders who possess education, experience, or training relevant to the business world. Working with a venture capital's fund is the alternative. Accredited investors have the opportunity to advance to venture capitalist status. These funds, however, have strict requirements and a minimum investment amount. Banknotes. No matter one's age, treasury bills are an essential investment. When you're young is the best time to buy treasury bills on a regular basis. Treasury bills are short-term debt instruments with government guarantees that are issued to manage the money supply and finance spending. There are many tenors available for treasury bills: 90, 182, and 364 days. Everybody has expenses to cover, including rent, tuition, and even exams for their jobs. Investing your available funds in treasury bills and cashing out when the bills are mature is a simple process. This falls under the umbrella of the asset and liability matching finance concept, which entails buying an asset to help pay off a future obligation. All treasury bills are different from other investment options in that it is risk-free, guaranteeing your returns. Furthermore, the returns are fairly good, so why not buy them? Alrighty, those were 5 assets to invest in today to make you rich. Thanks for watching.